So in terms of our process for evaluating deals, I think it's worth telling you that we say no a lot more than we say yes. So I think it's true that sometimes the best deal you did is one you didn't do, right? And I think up until a couple of years ago, there was a lot of deals getting done that in hindsight probably shouldn't have gotten done. There was a lot of FOMO, right? And it's easy to get caught up in that. And in terms of our underwriting and our projections, I think that conservative is a term you often hear, conservative underwriting. I think that's overused. I think we'd rather use the term realistic. And I spent a good portion of my corporate career involved in business forecasting at a very detailed level. So it's something I'm comfortable with, and I'd like to say that I've got a decent background in it, but we just try to be very thoughtful in our underwriting and in a bottoms-up approach to make sure that we're not overlooking anything important. Brian and Aaron are both really plugged in to the Greenville Metro, and Brian manages over 500 units there. So they really know what are the neighborhoods that are up and coming, what are the rent levels, what are places to steer clear of. So again, the local knowledge is extremely important in terms of making a sound investment in real estate. And kind of along those lines, the access to off-market deals and sourcing good deals is also a byproduct of being really involved in the community and being able to network and figure out who's doing what. So I think the connection to the local investor community that they've got there is also sets us apart and gives us an advantage. And we obviously will do extensive research and due diligence before we offer on any property. Kind of our high level criteria, what we look to buy is multifamily apartments and built to rent, newer built to rent assets typically. And built to rent assets are some of these, it's an experience, it's much more like a home ownership, right? Where you've got maybe one shared wall and you can drive right up to your unit, et cetera. So it's the next best thing to owning, but the price point currently is quite a bit lower. So these are very popular right now, the built to rent communities. We look for assets under 100 units. This way, we're also not competing against some of the really large institutional and big money investors that are out there. We look for strong demographic trends and economic growth where we invest. Obviously, Greenville Metro has those. We're talking about income growth, population growth, crime statistics, median incomes, all those things we look at carefully when we're looking at an investment. And we've already kind of highlighted the local expertise, and Arn's going to go shortly into more about the Greenville market. Typically, we aim to hold these assets 5 to 7 years, but we obviously will adjust our strategy as market conditions warrant, because we wouldn't want to sell into a slow market. We'd want to wait for the best opportunity to sell. So that's part of the equation there.
Great, Dan. Thanks so much for going over that for us. And